to the eNCA Money Desk. Rofhiwa Madzena joining us. And Rofhiwa, pardon the awful pun, but the cement industry is on shaky ground right now.
That's right, Sally. So embattled cement maker PPC swung into a loss of about 2.5 billion rand in its year-to-end March results. That's more than twice its 1 billion rand market capitalization. Now, there have been hefty write-downs to the businesses amongst COVID-19 pandemic. Infrastructure spend has been suffocated by several years of weak economic growth in South Africa. COVID-19 has worsened an already dire situation, and PPC has had difficulties in the Democratic Republic of Congo as well as Ethiopia. It's had to restate its results for 2019 after being unable to account for its international operations. PPC says it believes the South African cement industry declined by about 7% to 10% for the period, driven by muted demand as well as cheap cement imports. With that, let's take a look at how your markets ended off the day. So global shares were rallying today, and that filtered into the JSE, generally broad-based gains, and we'll take a look at that in a moment. Let's break down the movements with Martin Smith, Portfolio Manager at Anchor Capital. Martin, many thanks for your time. I just want to start with the local bourse. Really impressive end to the week, 1% in the green. Local catalysts or global catalysts that are pushing this?
Absolutely global catalysts. We've seen a lot of volatility over the last couple of weeks and specifically this week. But as you note, the US market has finished quite strongly. But absolutely will be taken by global forces over the coming weeks, especially with the US elections up and coming, potential further lockdowns across Europe on the back of COVID, and as well as just a COVID vaccine as well, which could also push emerging markets. But at the moment, everything is looking towards what's happening globally and specifically the US elections.
Right. Let's get to some company news now. We saw PPC results really reflecting a terrible economic environment, particularly in the construction sector. What did you make of those? And really, is there some green shoots for PPC to improve in the medium term, perhaps?
PPC is absolutely a geared play on the South African economy. And as you know, the South African economy is facing headwinds and has been facing headwinds for a long time. And in terms of infrastructure spend, which a company like PPC really needs, I don't really see that coming to the extent they need it to come in at. As well as the kind of expansion they've had into Africa, I don't think has been as much of a success as they'd hoped for. So PPC is one that I'm staying away from. I think there's a lot of headwinds. And there's been re-talk of structuring. I covered the share about 8 years ago, and even then they were talking about restructuring. So I think it's one that's going to have this continual restructuring process. But like I said, I think the economic and macro headwinds are quite strong for the company. So I'm staying clear for now.
Right. Long for life, Martin. I was really disappointed to see the profit warnings. These are the owners of Sorbet saying that profits are going to be lower between 90 and 100%. They were really hit hard by COVID, weren't they?
Absolutely. They were in the eye of the COVID storm. Like you said, they've got Sorbet, but they also have Hold Sport. It's another big one of their holdings, which is, of course, Sports & Warehouse. But it's also important to look at a company like Long for Life, well, a couple of things. One, to also look at the discount that it trades at, because it is a holding company. We need to realize that. So you need to look at that in conjunction with the HEPS number. But ultimately, what I think with a company like this is, do you back Brian Joffe? And he is one of the best businessmen to have come out of South Africa in a very long time. So it is one that do you kind of back the owner? So eye of the storm, but I think I'd be hanging on for now. I think there might be a bit of potential on this one.
Right, and then finally, Vodacom getting their license in Lesotho stripped from them for a fine, apparently, that they didn't pay. What's that about?
So I don't think it's massive material news. A unit that they own in Lesotho, they own 80% of it, had its license revoked by authorities in Lesotho because of an outstanding fine. They are now pushing back against that. So there are a couple of things on the go there, but is it material for the share? I don't think so. And the price action that we saw out of Vodacom today pretty much suggested that, with the share being relatively flat. And yeah, I don't think it's too much news. I think with Vodacom, you've got to kind of look at the dividend. Dividend is still very healthy, about 6.5 out of that share, which is one of only a few shares really on the JSE at the moment paying a dividend. So this, I think, is all a bit of a storm in a teacup.
Brilliant, Martin. Thank you so much for your time. That's Martin Smith from Anchor Capital giving us a wrap of the markets day and also giving us insights on company news out today. Sally, I'll be back in the next hour and I'll be speaking to the World Bank about Sub-Saharan Africa's economic outlook.
Look forward to that one. Thank you very much, Rofhiwa Madzena.